FOMC tomorrow, arguably the most highly watched in some time here, even more so than that inaugural 25 bips. Everyone knew that was coming and wasn't too dramatic. Scott Bauer joins the CEO of Prosper Trading Academy. Scott, it seems like everybody knows what's coming tomorrow too, but maybe an argument to be made. There's some uncertainty lingering. After all, we're still at VIX 30 and stocks can't seem to hold any gains.
Absolutely, Oliver. And, at our time, 1 o'clock tomorrow, we're going to get a 50-point hike, and the market's probably going to sit there and not do a lot until Powell speaks half an hour later at 1:30. And everybody is going to be, sitting on every word, every vowel that he says in terms of hints of what they're going to do moving forward. Are they going to start getting more aggressive? Are they bringing back bond purchases even more? Everybody's going to be hinging on that. So I don't expect much of a movement in the market ahead of the announcement or even after the announcement. But the last hour of trade tomorrow, really could be quite volatile.
Hey, Scott, you want to do some hypotheticals with me? A little if-then analysis?
Yeah.
Okay.
Love that. I could be like a weatherman.
What if he does shock? What if he says, we thought about it long and hard. We told you guys we're data dependent. We need to do 75 right now. What do you think the market does?
Big rip higher. Have a big rip higher.
Really?
Because there's going to be a lot of relief, I feel.
Wow.
A lot of psychological relief to the marketplace. Because quite frankly, Oliver, what is the difference, right? We're talking about 30 days or thereabouts between tomorrow's meeting and the June meeting. What's the difference if they go 75 tomorrow or 50 tomorrow and then 75 in June?
Hey, I'm with you.
The bottom line, right? There really is no difference. I think we get that situation tomorrow and we rip higher because a lot of that unknown now gone out of the marketplace, right? Almost a buy the rumor, sell the news type of event, but this would work in the opposite fashion here.
Bold.
So I think we actually rip higher. I don't see that happening.
Wow.
I think there's too much volatility in the marketplace. There's too much macro strife to the marketplace right now for him to bring that shock to the marketplace. Though I do think that we would see the market rip higher.
Wow. In a lasting way? So then I guess what if he goes like hyper dove? Do we crash? How does that work?
No, if he goes hyper, what would be hyper dove? Actually, let me ask that first.
Right.
Raises by 50 and then says, we're
maybe we're done.
Take our time with it.
Yeah.
Is he going to say, we're going to take our time with this?
Yeah.
I don't know what would happen there. I would still probably look like that would be a good thing for the marketplace. But then you're going to get people and maybe big funds out there thinking, here we go again. We know they've got to raise. We're going to keep, behind the curve. So maybe that is a big sell. It's just there is such a big question mark here. There really is. And that's why I said 1 o'clock, irrelevant, 1:30 our time tomorrow. That's where everybody's going to be with their finger on the button.
Hey, I guess one way to frame it is that the bond market's telling him he needs to hike, right? With the bond market being a little bit more hawkish than the dot plot itself, maybe to your point then, the bond market's saying somebody needs to do something about inflation and he does it faster. Maybe it could be positive. It's a very interesting theory.
I think there's a lot built in already on the assumption of what's going to happen over the next two meetings here. And to me, I'm not an economist. I'm a trader. I do understand economics. To me, I'd rather see the Band-Aid ripped off and say, okay, here's some relief now.
Yeah.
We know the plan is in place now. They've started it. Let's go. Because I'll be honest with you, Oliver, the reports that we have seen so far from an earnings perspective, if there were not all of these other overhanging negative issues to macro political situations and what's going on with inflation, I think the market would be 10-15% higher than it is right now. And it's just getting held down. I think earnings companies have really held in there, but there's a lot of bad stuff out there. There's a lot of bad news out there. We are feeling it. Main Street is feeling it. Market, down what? S&Ps are 13% off their highs, so they're in correction territory. NASDAQ's in bear territory. So the market is feeling it also, but the pain really is being felt by you, by me, by, Main Street USA. I think the Band-Aid needs to be ripped off for there to start to be some healing, both to all of us and marketplace.
All right, a hot take from Mr. Bauer. I'm with you on the economics 100% of the way. I wrote a couple of weeks ago, I think they should do 100 bips. I don't think we rally, though. I think we crash. I think this market still hasn't gotten over this new regime. But it's a very interesting case to be made because technically the bond market's telling me he needs to do it. And we did rally after the first hike, so it certainly is well within the realm of possibility. Love it, Scott. Great combo. Nice. Good to get our juices flowing here. Appreciate it, Mr. Bauer. CEO of Prosper Trading Academy. Yes, sir.